Well, you know what? There's a lot of issues impacting Saskatchewan agriculture. There might not be one that is bigger than the news that dropped last Friday night. China deciding to put some pretty stiff tariffs on Canadian canola, well, canola meal, oil, pork, as well as field peas. Joining us to discuss some of the impacts to the canola industry is the chair of Sask Oilseeds, farmer from West Central Saskatchewan, is Dean Roberts. Dean, great to chat with you.
Good day. Thank you for having me, Sean.
Okay, Dean, so we're recording this interview, just so everybody's aware, we're recording this interview on Thursday night. And today you met with Minister Harrison, as well as, I believe, Premier Moe. What's your message to them in regards to the impact here, what China's done?
Well, I think our message was already in their ears when we met with them that the canola industry is hitting some very choppy waters. We are in severe trouble right now. We're facing trade wars and tariffs and disputes going with two of our large trade partners, both the US and China. We're not in a good place, but hearing Premier Mo's address today, they get it. They understand the problem.
What needs to happen?
Well, in the very short term, we need the federal government to engage with the government of China, start working on resolving the issue, start talking about the issue. We have a very short period here to get in front of this before we potentially go into a federal election, a writ period where things go shut down. We need action now. The longer tariffs go on, the more permanent they tend to become. We can't afford to wait 3 months to resolve this. We need action now.
So that's a priority. What about the idea of compensation? Does there need to be compensation to growers at this point?
Well, I think there's going to have to be if this drags on for very long. Farmers are going to take severe losses alongside with the industry people who put money into crush plant expansion in the province.
One of the things that I have heard from some people is, well, wait a minute here. These tariffs are only on meal and oil. We can still ship seed, but there's a big but to this, and that is the fact that Canada's still awaiting potential tariffs on the canola seed as well from China.
Yes, you're spot on. This addresses the oil and meal going to China, but this doesn't address the earlier MOFCOM investigation into the anti-dumping investigation into Canadian seed into China. So we still have uncertainty around that. We have uncertainty into the U.S. market, and even this meal issue isn't totally resolved at the moment. So all this uncertainty, it creates unpredictability, and grain markets hate it unpredictability and instability.
Premier Moe mentioned that some of the crush plants in Saskatchewan may be shut down temporarily or for longer, which would be a loss of jobs and a loss, economic activity in the province. Are you concerned that there's going to be that those plants could shut down?
Well, most certainly, those plants crush seed into oil and meal, and the underlying question to that would be, what is the value of the meal? Where is it going? Who's buying it? Our main two destinations for Canadian meal are the United States and China, with one third of our meal, 2 million or so metric ton a year, million metric ton a year going to China. So when you have 100% tariff on one third of your potential exports, that is a big concern. And when you start looking around the world to find homes for that meal, it's not as simple as you would think.
We saw StatsCan this week forecast canola acreage. I think it was about 21.7 or 21.9 million acres for this upcoming season. Are those acres under threat? Could farmers plant less canola this year?
Well, I think that question will be on a lot of farmers' minds. Are you going to put $12 into the spreadsheet, 14, 15? What is the number for you can expect to get for a new crop canola bid? And the cost of going canola goes up every year. It's expensive. Fertilizer is expensive. You're going to want predictability in the market you're going to be delivering into. So I think that question will be on growers' minds coming into seeding.
Last week, the federal government announced some programming through APP, Advanced Payments Program, essentially more loans or a more friendly loan environment. We won't go into the details of it. Meanwhile, we're seeing the U.S. farmer getting compensation, a $9.7 billion package, because the market dropped on the 24 crop. They're talking about a market facilitation payment upcoming at some point in 25 because of some of the losses that are being suffered on farm. Is this the kind of ad hoc programming that Sask Oilseeds is asking for?
Well, I don't think farmers need more debt right now, Sean. The problem is this isn't a liquidity problem. This isn't like a railway stoppage where we have to manage our way through a couple of months until we can get grain delivered and shipped. This is value destruction of the crop. This is money coming off the revenue line. That's not fixed with financing. That has to be replaced with dollars.
I know you've met with like we talked about the Saskatchewan government. We're going to find out who the new ag minister is on Friday. What would be your message to that individual, whoever ends up being the Minister of Agriculture?
Well, I would say it's time to get on the phone and get talking with China and start looking for resolutions. We need to sort this out quite rapidly.
And it's the speed at which this needs to happen. This is not something that can take 2 to 3 years. This is something we need to be dealt with now. That's what I'm hearing from you, Dean. I just want to make sure I've got that straight.
Absolutely. Yeah, the urgency and immediacy cannot be overstated. We have to move quickly to start finding solutions.
We've been talking to Dean Roberts. He is the chair of Sask Oilseeds based out of West Central Saskatchewan. Dean, really appreciate you joining us here today for Real Ag on the Weekend.
Thank you, Sean.